how am I going to get an installment agreement if I can't pay them? I don't have the money to pay them. I owe them so much money. How am I ever going to pay them? So there's two types of installment agreements generally. Now there's 4 or 5. It depends on how much you owe, on exactly what the IRS would agree to, and the kind of options that you have. But roughly, there are 2 types of installment agreements. One we call the full pay. So I'm going to figure out how much I owe them, and I'm going to divide it by as big a number as I can, and that's going to vary depending on how much I owe them, depending on how much time is left in the CSED. Now remember, the CSED is the collection statute expiration date, how long the IRS can collect from me. Well, if the CSED is coming up in 3 years or 4 years, the IRS is going to want to collect all of their money before that date. So I have a smaller denominator. I have to divide by a smaller number. That means my monthly payment is going to go up. I'm going to have to pay more. Right. And so it's a good thing that it's going to go away. It's a bad thing because the IRS is going to demand more money in a monthly payment to go in an installment agreement. But here's the thing. And here's how a lot of this is settled that people don't realize. There's an there's an installment agreement. We call it the partial installment agreement. And they call it that too, the partial installment agreement. Well, what's that, Attorney Leahy? Okay, just what it sounds like. Where a full pay depends on how much you owe. Right, because it's based on how much I owe. A partial pay is not based on how much I owe. The partial pay is based on how much I can pay. Right, how much I can prove to them I can pay. Because if I ask the IRS, how much can I pay you? They'll tell you to pay it all. We're going to divide it by, we want it all yesterday. So, maybe we'll give you a year, 12, so we can divide it by 12. Well, can you give me 2 years? Yeah, divide it by 24. We'll do it. How can you give them 3 years? Well, we can stretch it to 3 years. That's 36 months. But again, what they're not telling you is sometimes they can go to 72 months. Sometimes they can go to 84 months. Sometimes I've gotten them at 10 years, right, which is 120 months, right? So sometimes you can do that. What does that mean? That means I get longer, so my monthly payment's less. But it also means I'm going to pay them a lot more in interest. So usually I try to get people, if a full pay, we try to get them in as low, well, even with the partial pay, get the number as low as I can, and then encourage people to pay more, right? Pay the number down. Because if things are bad, if you have a bad month, you have to make the payment. So you want to make the payment on a full pay as low as you can. Now, same thing on a partial pay, you want to get it low, but you don't want to make extra payments on the partial pay. So people often ask me, Attorney Leahy, can you reduce what I owe the IRS? And this is what we call that's the offer in compromise. And so the answer is not as often as I can reduce what you pay the IRS. Now that's a different thing, right? So I don't reduce what you can pay because, as I mentioned, they have the CSED, the collection statute expiration date. So these are the IRS loves 2 things the most, right? Besides you paying them, they like acronyms, so many acronyms, and then they like form numbers. So 2848 is the power of attorney. 433 form 433 is this financial collection sheet that we talked about, and this is how you determine how much you have to pay the IRS based on this financial information sheet, the 433 form. And what people do wrong is that they address this by themselves, and they don't understand what the IRS is trying to do. So they'll get you on the phone and they'll say, hey, how much you pay in rent? What's this bill? What's that bill? And then you'll say, well, this, and then you'll give them the numbers, right? And then they'll say, okay, well, if I deduct that from what you make a month, well, you could pay $1,800 a month. And you're taken aback, but wait a minute, I can't pay $1,800 a month. And they say, well, by the numbers you just gave me, the answer is you can pay $1,800 a month. So I've seen a lot of people fill out this 433 form by themselves, and even their own numbers show that they could pay a vast amount of money every month. Right. And so sometimes you'll have to pay more than just dividing it by as many months as you can. Depends on how much you owe. Right. There is a point after which the IRS is going to look to the 433 form. And if it looks like you have a lot of disposable income, they're going to ask you to pay it. Right. If I have assets, they're going to ask you to deliver them. So these are where the problems come in. And this is but again, these where the vast majority of these cases are settled with an installment agreement. I'd say probably 90%, maybe more, of these cases are settled with an installment agreement. Maybe, I guess I won't go to 90% because even there are numbers here. What they showed was, let's go back to the numbers, and that a good portion of people pay right? Why do they pay? Because the IRS is taking things from them too, right? And or threatening to take things from them, and so they pay. So they, whatever they owe, and you can see here. Let's go up here. There's some interesting numbers up here. The number of federal tax liens filed, 291,000. And this was last year where they weren't even working, right? The year before it was double that almost. So, and that's not unusual that they file a lot of tax liens against people. And the tax liens means if I sell anything, they're going to get paid. If I'm going to sell my property, the IRS is going to get paid. And then the number of levies requested on third parties. So this is a wage levy. This is a bank levy. When they go in, a levy is when they go take things away from you. So they did almost 400,000 levies, right? Where they went in and they took income, they took money, they took things from people, and that's another that's why they get paid, right? Because they go take it from you, and so a large amount. So let's say 80%. To be safe, 70-80% of all these cases are settled on an installment agreement. And so anybody else tells you different, well, they're not looking at the numbers, right? The numbers speak for themselves. The numbers show exactly what's going on. And I would say last year they only took 77 seizures. So that means that houses and things. They don't generally take your house and cars. At least they didn't last year, right? And so, but they don't generally take your house. But they take your checking account, right? They take your wages. That they take. They won't hesitate to do that. So I'm glad I wanted to go through the numbers with you, because it opened your eyes to how these problems are solved, and why it's so important to get somebody who understands what they're looking for, right? Because you don't understand what they're looking for. They understand it, and they're gonna use that superior knowledge to get as much out of you as they can. And so that you have to be able to address this and fight for the best deal possible. And again, a lot of times you're not erasing what you owe the IRS in the offer, because again, that number is so small. But you can come up with a partial installment agreement, pay the IRS less than you owe, and then eventually the CSEDS date can come in and wipe it out. Because a lot of times the penalties and interest are so high, you're never going to be able to pay them. And that's not your fault. That's the way the IRS, the system works, right? They penalize you. And so when you have I've heard from so many people tell me, I don't mind paying the IRS what I owe them, but can we get rid of the penalties and the interest? And the answer generally is no. First, you're never going to get rid of the interest. So if you owe from 7 years ago, that's one reason why the number gets so big, because they have a relatively low interest rate, but it compounds every day. So that number grows very quickly about what I owe the IRS. And that's why many times I'll never be able to pay them. But then the question becomes, how can I make sure that I can come up with a payment plan I can live with? And that's what an installment agreement is supposed to do. Again, if you leave it to them, then it won't. So think about that next time you see these commercials where they start telling you how they can solve your IRS problem for you for pennies on the dollar. Right. And you just come to them and I got to tell you how many clients that I have that as I'm trying to help them, they get letters from these outfits who tell them, hey, we could do this for 10% of what you owe. Well, if you're paying the IRS a lot of money and someone starts telling you they can get you something at 10%, what are you going to think? Yeah, well, I want to do that. Right. But the answer is they probably are not going to get it for you. As the numbers speak for themselves. So the IRS numbers, they always speak for themselves. Look at the numbers and compare those before you make any decisions. So, but if you're having all this is covered in my book, deal with your IRS problem today. So get a copy of my book, go to freeirsbook.com. Again, that's freeirsbook.com. We're going to ask you to pay for shipping and handling, but that's a small number. I give you some free reports with the book, and some other, what do they call tchotchkes, some other things. So, get a copy of my book.